So here we have the E-mini S&P daily chart, and you can see we had a nice delivery to the upside. Initial draw was inside this area in here, up into the bearish order block. Now notice that we traded up into this up close candle with today's range. Didn't quite take out this high. I think that's the next area to look for. But in here, when we're looking at a candle that we're using for like an order block, the low, the open, in the middle of the range, those are the three sensitive areas that you're watching for. If the market trades up into the middle point of that candle, this is what I call the mean threshold. Mean threshold was taken today, and that to me bodes well for a continuation to take out this short-term high. So if you take your fib and you run it across this candle, the 50% level, right here's the 50-minute time frame. Here's yesterday's trading. Trade up into that small little area down here, into that low. I mentioned that was going to be a likely candidate for upside relative equal highs as well. We traded back down into a fair value gap. Optimal trade entry. Rallies up, takes out buy sell liquidity above the short-term high back here, which I don't unfortunately have in my chart, but you can see that on your own 50-minute time frame. And then we consolidated ahead of today, and then during the crossover into New York midnight, has a small little Judas swing where it drops down, creates the low of the day, rallies, leaves relative equal highs in here, and this high intact. It drops down, rallies once more, small little retracement, and then it does a shallow run above 4,000 on this past here. In this small little area on the lower time frame, I used this little retracement to highlight a run to 4,000, because I gave you guys 4,000 was my objective. It hit it, and then we pressed deeper into the order block on the daily chart, which creates this whole run here. Now I'm going to go into the details about that here, but for now, just know that we were trading up to this level, failed to go to that same level, consolidated right below that daily bearish order block. That's the low of the candle that creates that daily bearish order block, and then the opening when that candle's a little bit higher, I think it's 4,002, but don't hold me to it. Look at your own chart. So we had a small little pass above 4,000, retraces back down in. We'll look at the lower time frames and all of this price action now. Into the 5-minute candle. This run here to here. This price leg is part of this price leg. Okay. Notice how this candle's high to this candle's low. That range, okay, that range right there has one single pass. Whereas this one has 1, 2. Notice that? Low, high, small little retracement, and then a second level of running. Because it had 2 stages to this delivery, I want to use this most recent one, and this is my dealing range. All right, so this dealing range here, I measured the low to the high, 50% is equilibrium. I want to see it drop down into discount. This small little area down here, fair value gap. We want to look at that on the lower time frame. So with that said, the market rallies in here, drops down in to the fair value gap there. Once more above the 4,000 level. And then going into, here's 830 by the way. This is the 830 candle. And you can watch when it trades right into that fair value gap. It rallies again, drops back down in. And then at 9:30, this candle here explodes to the upside, takes off, and starts digging deeper into that. All right, so it traded up into almost the 4,074 level, looks like almost. So we'll be looking for a continuation to the upside, 4,095. 4,100 is next consideration. But I want to take you into the price action down in here and give you more details as to why I was willing to take something a little bit earlier today. Okay, if you plot the NASDAQ June contract for 2022, and on the compare chart on TradingView, if you go up into your TradingView platform, you'll see like a little plus symbol up here. If you click on that, it'll give you an opportunity to add another instrument. And you add this symbol here, NQM2022, and it'll plot a line chart, but it's usually going to be plotted on the close. That's like a default. You want to change that in the settings by just right-clicking over here or highlight over top of it, and it'll give you like a little gear or something. Click on that and change the settings to, and just change it to plotting on the low, because you're comparing lows. As you can see, the NASDAQ went lower here, whereas the even the S&P failed to go lower. That's an SMT divergence, okay? SMT, smart money technique. It's accumulating in here, whereas the NASDAQ is taking liquidity out. So there's a cracking correlation between the two. Usually they move in tandem, but at certain times, what times? 8:30, 9:30, at news events being released, okay? They'll create this divergence. And if you have a bias, it's helpful. But if you don't know where it's going, you're going to many times encounter what would look like SMT divergence, and then it disappears as they start moving in concert with one another. So you have to be careful with that. That's why I'm teaching. That's why I always teach. Know what it's reaching for. Okay, the bias has been bullish. And for my framework, for my setup, because I gave you 4,000 and I had very little time to work with anything this morning, I just hurried up and saw the chart. I missed the actual ideal entry. I just used a close proximity entry with an order block. And there you go. So if you look at the relationship of that fair value gap, dropping back down in higher low than that of 830 versus the lower low made in NASDAQ. This is a stop out. This is accumulation of longs. This is going to be the telltale sign that it's going to go higher. If you look at what we did on 830, it already snapped down into this gap, and it's not likely to go lower than that. There's no need to. Okay, so it's being compressed, basically like a spring or like a bomb, really. I hate to say it, so crude, but that's what it is. It's like waiting, and then all of a sudden it explodes. It's waiting just below that daily bearish order block, and it's digging up into that thing at range on that up close candle on the daily chart. So it's climbing up, and we watch to see if it gets to the mean threshold, which is half of that bearish order block or up close candle on the daily chart. I was making reference to it at the beginning of the video. All right, so again, we can see zoomed in, price breaks back down into the fair value gap after trading to the order block here. This is a 15-minute time frame order block, by the way. And then it rallies. Inside this little area in here, there's one small little pullback into a fair value gap on a 1-minute chart. I'll leave that for you to go into and study. And here is the hourly chart. I want to kind of give you like a market structure perspective. Here's where it's likely to be drawing to next. All of this movement down here, we completely rebalanced all that. Here is the fair value gap I had drawn on the lower time frame chart just a moment ago before we move back up to an hourly chart. We have consolidated here ahead of running all the way up into this area here. So notice what was happening. We had the low, retrace down into this low to high, discount, fair value gap, rallies. Dealing range low, dealing range high, retraces down into, discount, rallies. Dealing range low, dealing range high, discount, fair value gap, order block, rally. Consolidate. We rally, come back down into the smaller time frame, fair value gap, SMT divergence, and rallies, and keeps pressing higher and higher and higher. Because it was setting up this trade here, take this for your notes. Because it gave nice run here earlier, before 7 o'clock in the morning, that means we're probably going to have a deep retracement and look for an ideal scenario like we outlined with the SMT divergence. So SMT usually will occur around a 9:30 time period when there has already been a nice early run before 7 o'clock or at 7 o'clock.